Matt, thank you so much for having me on. I really appreciate it, and I was so happy to be able to get in front of your audience and talk about Spartan Invest. Like you said, I'm CEO and co-founder. We are a full-service turnkey company, and what that means, we're based out of Birmingham, Alabama, but we service Alabama, Georgia, and Tennessee. We handle every aspect of the real estate investing arena when when you're looking at single family homes. So we are out there acquiring the properties, renovating them. We pass them on to our in-house property management company, and then we sell them to investor clients. And our goal and our why is we want to create mailbox money, passive income for those that want to invest in real estate but may not necessarily have the time or want to spend the energy to learn all of the steps in order to be a successful real estate investor, or those that may just not live in areas where real estate investing makes sense. The majority of our clients are based out of Southern California, Hawaii, New York, just areas where the rate of return, it just doesn't feasible for rental properties. But going back to how we got started, and I like how organic our beginning was, and that me and my business partner, we were working at the same corporation right out of college. And we had started doing some flips on the side. He had a family member that was flipping properties in Montgomery, Alabama, and said, "Hey, do you want to try it in Tuscaloosa?" That's where we were. And so he did that a little bit, saw that, hey, that's a pretty good markup, the flip method. And obviously in 2009, 2010, the inventory was extensive, just the resale was the struggle. But after a couple of successful transactions, hey, we can really make something of this. We both left our corporate jobs and started flipping properties. And it was HGTV. We were focused on A plus neighborhoods. We were buying foreclosed properties on the courthouse steps and doing just these huge renovations to them. And we were profitable and we were doing really well. However, just in those years in 2010, 11, 12, the purchase price and the labor materials, all of those numbers were amazing. However, the resale, the how long property sat on the market, the concessions that you were having to give. If you're a two-person company and you're trying to grow and scale and you've got 6 months out of the year where inventory just does not move, it's extremely stressful. That's how we made our money. And in kind of a panic, we went out and purchased a ton of rental properties. Most of them we bought off the courthouse steps in foreclosure, and we did some renovations to them. We didn't do near the renovations that we do now. And I can talk a little bit more about everything we do to the properties now, but we did very minimal work to them, and we started managing them, leasing them out. And the income that we were receiving from those properties, from that portfolio that we were managing, that was our overhead expenses. It was paying utilities. It was paying all just our paychecks. And again, our paychecks were very small then, but still it was sustaining us. And that's really when the light bulb went off for us, is that this was the value that we saw in real estate. And there's definite value in the BRRRR method if you're flipping to owner occupants. But at that point in time, we decided that the true value that we could pass on to others was the opportunity to gain wealth and passive income by providing this to them, what we had seen, what was sustaining us. And so that's in 2013, we made a hard shift. We stopped flipping properties to owner occupants and went full steam ahead into the turnkey model. We started our property management company as well. And then in 2020, we started our new construction company, Corinth Construction, that will do new construction for owner occupants as well as BTR for Spartan Invest clients. And so we try to touch every bit of the single family space to provide investors that diversity, and kind of the rest, they say, is history. After
Yeah,
15 years, we've got over 2,000 doors under management in 3 states.
yeah, that's interesting. So do you have any, you mentioned the 3 states there, and you mentioned various different states as well. Do you have a certain demographic or a certain city that you look at in each one of those states, certain areas, or is it anywhere in any of those locations?
Our biggest market is Alabama. That's where our home office is. We're in downtown Birmingham, and then we go really anything from Montgomery, Alabama north. And so that's central and north or Alabama. If you're not familiar of the location of those cities, we're not anywhere on the south end of Alabama. The flood insurance required due to being on the coast, it's extreme. Or sorry, being on the so close to water, the rate of return on those, it really hurts. It's going to make it a hard market for us to enter into. In Tennessee, we have an office in Chattanooga, and that office services that side of Tennessee and then dips into northern Georgia in your Rossville, Ringgold, Dalton area. So that's the location in which we service both of those markets.
Cool, cool. And everything that you do up until this point is single family. Is that correct as well?
We have some properties that have ADUs. We've done duplexes all the way to quadplexes, but the vast majority is single family.
Okay. Okay, cool. So who is your end buyer? Is it investors or is it people who are looking to be able to move into these, or are you renting these 2,000 units out? What does that look like at this point?
So the properties, once we're finished with the renovation and we hand them off to our property management company, now they're handling for the life of the property, they're going to handle the management of it. So they're going to place that tenant, they're going to handle any kind of maintenance that comes up, they're going to handle the renewal, et cetera, et cetera. But what we're doing on the Spartan side is once that property is occupied with a paying tenant, we flip that property then to sell to an investor client. We don't sell to owner occupants. Our end buyer is those looking to grow their rental portfolio. And the really great thing about the markets that we're in and our business model is your barrier to entry is extremely low. Our average price point is 165,000. So if you can come to the table with 20 to 25% of that, then you're able to purchase the property. And one of the reasons that we try to stay in the single family space is because we've seen a lot of investors be able to exit like easier. There's a multifamily is a faster way to grow your portfolio, and there's a lot of benefits to the multifamily and apartment complexes. Where we see on the single family side though, if you're purchasing the property whole, if that's your asset, and then something happens as life does, and you need to exit quickly, if you own the single family home, your path of exit is a lot bigger. Your
Limited, yeah.
pool of buyers you could sell to an owner occupant or to an investor. There's really no one that you couldn't sell to. Whereas if you are in the multifamily space, finding that end buyer, if something does happen and you need to liquidate, it can be a little bit more challenging. So that's where we've seen a lot of investors kind of want to stay if that's why investors come to us more on the single family side as well.
Yeah, that makes sense. Explaining your business a little bit further, when someone buys a property from you, they come in and they put the 20% down or whatever it is. Are they buying the property and kind of taking over from there? And are they responsible for the trash and toilets and all of that? What does
No,
that look like?
absolutely not. That's our goal is we want to make this as passive as possible for our clients. And so we're going to handle everything. We are the one-stop shop essentially for real estate investing. So once you come to our website and decide that you want to move forward and purchase a rental property, select it based on our pro forma, and you put that property under contract. You go through financing or you pay for it with cash, whichever you choose. Majority of our clients are utilizing our forward commitment. And what that is like, we're doing just like your DR Hortons. We are buying interest rates down in bulk. And so if you do want to finance the property, you're able to lock in a 5.5% interest rate when you purchase with us. And so if you finance the property, you own it, and then you go to our next team and you flow through our own department. So we're all still in-house. And now you have an investor relations team member that's going to walk you through everything on the property management side. You're with our property management company. So they're going to let you know when, that your property is rented, that your rental payments are coming in. They're going to call you and let you know, hey, sorry, your tenant flushed some toys down the toilet and we had to send a plumber out. And so that's going to be on your ledger. So we've got somebody that's constantly letting them know what's going on with their property and then sending them the money each month. And so that's really the biggest benefit in buying and purchasing with a full service turnkey provider is that we're handling every aspect of it. You need to you can get involved as much as you want or as little as you want. And we have investors all across that spectrum. We have investors that say, I don't really care. I don't care if it's pink and looks like the Barbie dream house. As long as it's cash flowing and the tenants are paying their rent, that's great. And then we have some investors that say, hey, I want to know everything about the particular person interested in renting, or I want a ranch style brick 3-2 with on a half acre. So it really depends, but we're able to cater to a lot of different investors' needs when it comes to the single family space, just based on how many markets we're in.
Yeah, that makes sense. That makes sense. Talk a little bit about the returns that you can make as far as investors are concerned. What is the IR? I'm not sure even if you use IR, that's more of a multifamily term, but what is the term for
Yeah.
single family houses?
So there's two. If you're looking at our pro forma, it's we calculate your overall rate of return in two different ways. And if you purchase the property with cash, then we showcase that. And if you are purchasing it with cash, you're going to generally, and these are averages because we're doing almost 300 properties a year, so it have to speak in averages, but you're typically going to see anywhere between a 6.5 to a 7.25 in overall rate of return if you purchase with cash. Now, obviously, your capital, your out of pocket capital is substantially less if you finance that property. So it's going to shoot your return up. And what our finance clients see is 9.5 to 11 is average return. Now, I say that saying that we're not factoring in a couple of different things in that return. Like we don't factor in appreciation. We're not saying that, hey, this property is going to appreciate, even though we know real estate does. We know this property is going to appreciate. This property is going to be worth more in 5 years and 10 years. We do show that on the pro forma, though. We break that down and say, hey, based on this property zip code, historically, this is what this property is going to appreciate, but we're not factoring that into your overall rate of return. It is just your cash flow over your capital, your income over your capital.
Yeah, that makes sense. Can you talk a little bit about the business itself? What were some of the things that you had to overcome to get the business up and running and establish itself? What does that look like for you? And that was a good number of years ago.
It was, but it's not anything that ever changes. It's just new problems. There are always, it doesn't go away once you hit a certain property number. There are just always new challenges. There's new challenges when you only have 20 properties versus you have 70 properties and a quarter. And I think it really depends, but there isn't one department, there isn't one area that we have not struggled in. So I guess if you want to, anything in particular.
I'm just curious from both from a investor standpoint and from a person who might be looking to get into this as being part of their business. Like these are some of the things that you might have had to have stepped through. Does that make sense? Like these are some of the challenges that you've had to undergo.
Yeah, man, I really think that I could talk probably for about 4 or 5 hours about all of the mistakes and challenges that
Yeah.
come across when you're starting a company. I think one of the largest ones is building the team. And I know that is a hot topic that everyone wants to discuss when you are trying to build your portfolio. They say, hey, build your team and make sure you're building your team correctly. And that's no different when you're growing a company. You've got to make sure that you have the right people on the bus and in the right seats. And that's something that you're never going to bat 1,000 on. But putting processes in place to try to make sure that you are hiring the right people, that you're growing the company and the culture the way that you want it to is hands down the most challenging piece. I'm a very firm believer. And if you're hiring employees and you're taking care of them, that they're going to take care of your clients. And that's a big part of Spartan's company culture. However, finding the right people that will embrace that and will take care of your clients and will do right when they're working on the renovation, when they're managing the property, when they're leasing it to a potential tenant. All of those things are crucial in the overall performance. And so finding and building the team to handle those. And then, of course, there's the unknowns. And the biggest takeaway, I would say, there's always going to be the challenges. It's the act quickly. I have seen a lot of companies in that they'll get from point A to point B by doing it a certain way. And there's nothing wrong with that. But to get to from point B to C, they're going to take that same process. Well, hey, it's been working. That's the way we've always done it. And they're going to continue down that path. And I can't stress enough how important and how critical it is to be able to pivot and pivot quickly. The second that you see something that is off, the best way to see something that is off is to track everything. And this is a weakness of mine, unfortunately, is I can sometimes have, what is it, paralysis by analysis,
Yeah.
and where we're tracking everything, possibly anything that you can think of. I want to know. I want to know how many days it takes for somebody to get out to the property and walk it after a tenant vacates. So, hey, the tenant vacated on this date. How quickly did we get somebody out there? And then how quickly did the contractor start on it? So what is our average turn days? How long does it take somebody to move through the eviction process? What is our occupancy? What's our days on the market? All of those things you've got to track. And if you're not tracking them, then how do you know that it's a problem? And how do you know to pivot to address that problem? And I think that's true at any point. We continue to do that. Now, we have gotten better at it. When we first started, we weren't as great at tracking the things because you have to learn at what to track. You have to learn what's right, what's wrong, what are some of the needles that need to be moved, and how do you change the process in order to move said needle. But just the ability and the openness to pivot, I think, is probably the biggest factor in scaling.
Yeah, that makes sense.
That was a really long-winded question, man. I'm
No,
so sorry. Answer. That was a very long. I apologize.
it's all good. It's all good. It made me think of another question though too. So you're tracking all of these variables, and again, this has taken years to get to this point, but how does a person know if they're tracking the right things or not? They're measuring the right things or not? Is there any rule of thumb that you found over the years that works best for you?
That's a really good question because I don't know 100%. I'm not sure how you determine whether or not you're tracking. If you're looking at industries, I also believe that, hey, don't reinvent the wheel. If you're a property management company, there are other property management companies that focus on single family. So what are they doing? What is industry standard? And gauging that. I will say it's harder to do that because there's not a ton of full service turnkey companies out there. There's less than 5 that are at the volume in which that we are. So the industry standard is a little bit harder to gauge. But I think you have to back into that number if you want to figure out what to track. So if your goal is, "Hey, I want to have a 95% occupancy," and you know that it takes 32 days to lease a property on average, and that's what you're showing right now. And then the second that days on the market goes up to 40, that's going to drop you to a 93% occupancy. What happened to make that? You know that 95 is the goal. So what happened to make that? Have leads not been followed up with? Are we looking at all of those leads? Are we following up within 24 hours? Do we need another leasing agent? And so it's begging those questions that you can then dig into the metrics to make sure that you are tracking the right things. But I think you have to start with the goal and where you want to end up and then back into what you should track.
Yeah, yeah, that makes sense. If people or investors wanted to either learn from you or start their own company at this point, what types of things are they trying to achieve? What are they trying to put in place that you guys have already put in place at this point? What are they trying to measure and that? Does that make sense?
So if someone is interested in starting like a turnkey company or just a real estate or just a company in general.
No, a turnkey company will keep it real estate focused, but some of the things that you guys currently measure, whether that be how long the unit turned, that would be something that you think you would want to learn to be able to measure. So what does it look like for you versus them to get this measurement off the ground? Does that make sense?
So it definitely varies on what we're tracking because there's the properties move through two different companies. They're going through the turnkey company of Spartan. And so we're tracking completely different things there. And so we're looking at how quickly we can get that property purchased, how quickly we can get it through our renovation, what our quality control is on said renovation, how long it takes us to sell it, what is our net profit per property. So we're looking at things very differently on the Spartan side than we are on the Atlas side. But I do think that there's still a lot of information out there on what the industry standard is on a renovation. And I will say, so when we were trying to determine what would be a reasonable over budget, we call it our delta to max reno. So we're saying that this is the max we're going to spend on our renovation for this particular property. And what is the delta that we're okay with? What is the overage that we're all right with? And it's really just, hey, Googling and researching. And it's like, typically renovations that are over 25,000. That shows you how long ago this was. This was 15
Yeah.
years ago. That was our average renovation was 24,000. Now it's 53. Yeah, inflation is live and well. But if you're looking at when we were doing that research, it's hey, that was about the average. If you're saying, hey, it's under 30,000, on average, those jobs tend to go over around 6%. So that's where we started. Is like, hey, we're gonna be okay if as long as we stay under that 6%. So we budget for that on the purchase. We know we budget for a 6% overage to account in our profit because we know that's on an average. Now, a lot of our properties come in right on budget, and then some of them come in way over budget.
Yeah.
But as long as we're staying within that average. And so all of those are just, it's really on a case by case basis on where you want to end up.
Yeah, that makes sense too. If you were the 6% that you're talking about for going over a unit or a home, you have that outlined in the prospectus for that particular property for that particular turn, or what does that look like from a renovation standpoint? Again, you have 6% that you have whatever it is, $25,000. Is that $25,000 a year per turn, or $25,000 every 5 years, or what does
Mhm.
that look like?
So that's not on the property management side. That's on the Spartan Invest turnkey side.
Okay.
And so
Yeah.
that is the renovation. And again, like I said, it's on average $53,000 right now. So
Yeah.
that was back in the day. That would be great if we were still looking at those numbers, but that would be for the overall renovation of the property. And so that's what I was saying. Like we bake that into the purchase of it. And the goal is to never be at the 6%, but we know that's where we can't go over. And by drawing that hard line of, hey, we don't need to go over 6%. As soon as everything is ticks up, we know that there's a problem. And it's not just something that I look at. It is to our core. We are tracking and talking about all of the numbers. Every employee at both companies, I'm sorry to say three companies because we have our new construction company as well. Every single employee's base, like their pay is centered around their own individual metrics. This actually came from me being at a corporation. I was a manager at a corporation and we were one branch. And to be able to move the needle on one of those KPIs was impossible. The amount of work that I could do to move one particular number to a certain degree or not to be able to make a bonus was just it was just completely out of my control. And I definitely wanted something different when starting and growing Spartan. And so every person, and it's a pain. It is a lot of work to sit down and calculate we have over 80 employees, and all of them, based on department, have different bonus and pay structures based on their own KPIs that they can directly affect. And so I think that's a huge contributor too, because you've got everyone's buy-in on their one thing that they know can move the needle. So like my leasing agents, they are paid primarily off of security deposits and overall days on the market and occupancy. And it's completely different than my AR team on the property management side. They're paid on keeping evictions low and in total and AR in general, keeping more of the collections in and applications approved. So they are paid completely different, and that incentivizes them to be able, and I'm sorry, it incentivizes them to know that they can actually make a contribution. They can
Mm.
move and positively affect their pay. And I think that's a big factor when you're looking at how easy it is to implement. And then every Friday morning, we have a company-wide meeting where every manager and or director gets up and they have to write their numbers. They have to write them, and if they're at goal, they write them in green, and if they're close to the goal, they write them in yellow, and if they're nowhere near the goal, they have to write it in red. So there's also that level of accountability too, where we're here and everybody can see the numbers in the departments that we need to focus on. And I think transparency goes a long way with that as well.
Yeah, that's an interesting thing too. Can you talk a little bit about what that does to people when they get up and write in green versus in red?
Nobody likes
What
to write
is
in red.
Yeah, what does that look like from a personnel standpoint?
I will say that if you are getting up and writing in red constantly, it's never fun. It's never great. And sometimes it may not be something that is in your control, right? Like sometimes
Yeah,
things happen, but the goal of the meeting is not to focus and pinpoint the red. That's not we're not talking about the negative red. When they have to go up there and write a number in red, or hey, and so they'll talk about as, hey, yeah, this was bad this week, and every department has to tell what a fave and a flop was. So for that week, what was something that they did and what was something that they messed up. So by normalizing and being transparent about the mistakes, and then also celebrating. So anytime somebody's up there writing in green, we're clapping. Oh yeah, man, that's
yeah,
awesome. Or we didn't have to send that many people to eviction, or our days to deposit came down, or we hit goal on number of reservations this week. We're celebrating those. So it's not meant to shame the bad, but it's also meant to at least acknowledge the red. And that's the end goal of it. But yeah, it definitely does have an impact in that you don't want to get up there and write red. Nobody
yeah,
does.
yeah,
But
exactly.
but knowing that it's, hey, the second it turns green or the second it even turns yellow, we celebrate that too. If it's been tough, because some of these numbers are hard to move. They're lagging numbers. So once they move from red to yellow, that's a celebration. And I think just a lot of times, if the bad news and not sharing the bad news and trying to sweep it under the rug, how does it get better? How do you improve as a company or as a team if you try to ignore the things that need the most attention?
Yeah. It feels like your your methods to teamwork drive the team and keep them going and has a positive impact on the team. What would you say goes into the teamwork as you know at this point? What have you done to be able to set up how the team currently works and its effective point? Does that make sense?
Yeah, like how the culture was set up.
Yeah, yeah, the culture and the teams as well. Like what getting back to the team itself, like how they operate, how they impact, how the red impacts them, how the green impacts them. What does that look like from a operational standpoint?
This is probably one of the most challenging things that I had to learn as a leader, is that I can't touch everything. I can't be at all of the places. So starting from a very small 2 people to growing it to over 80, when we started, I was doing all of the things. There wasn't a job that I didn't do or touch. And so as we continue to scale, the number of those tasks or those projects or anything, they slowly move off of my plate. And I struggled a lot for a couple of years of letting that go and finding people. And that's the biggest issue. That's the biggest hurdle when it comes to growing and starting a company. It is finding the people that can take those things, because it's not really me that makes the culture. I'd like to think I set the tone, but it's the people that are here that are just amazing leaders. It is a very goal, team, family oriented group of people. And I just don't feel like I can really take credit for that. It's more letting the right people have it and letting them run with it is what allows for the transparency, is what allows for me to focus on other things and not have so much on my plate. Does that make sense? I
Yes,
just can't stress enough the importance of delegation when you are scaling, and it's hard. It really stinks because inevitably you're going to let somebody else do it and they are going to mess it up and you're going to have to move on from them. So you're going to have to take it back on. And I have this conversation a lot of times with my managers in the building too. They're like, "Well, I'm like, no, you don't need to be doing that. You need to pass that off to somebody else." And it comes from such a good place. I'll just do it. I'll just handle it. It's I don't want to, because it's going to come back to me. You
yeah,
don't know that. You don't
yeah,
know that for sure. It could. That's true, but you don't know that for sure. And so that's always a struggle when you're scaling. But if you're finding the right people and you're passing it off to them, it's the managers and directors here that make that transparency and accountability what it is.
yeah. That makes sense too. Yeah, this is really interesting stuff, Lindsay. If people want to learn more about you or your products or your services, how would they reach out and get in touch?
Yeah, our website, it's spartaninvest.com. We have just so much information on the website. And if you're interested in hearing our story more in depth, myself and my two business partners, we have a video that kind of walks you through how we got started. It's on our YouTube page, but our website is full of market reports, investor guides, and it'll detail out how we find and locate the properties to purchase, how we do the renovations to them, how we manage them, how we find tenants. It outlines all of that, the materials we use for renovating the properties. And then it also will list out all of the properties that we have available for sale if you wanted to check those out. So it's got a great deal of information. And then I also have a podcast. It's On the House with Spartan Invest. It's not necessarily a podcast about all things real estate. I do have some guests on there that will talk about different methods of investment, but it is primarily a tool to deep dive into things that we do, into our processes. So if you are interested in purchasing in Alabama, even if it's not with Spartan Invest and you want to know what the eviction process looks like, I have a couple of episodes that will outline exactly what that eviction process is and what the steps you have to take, the steps that we have to take in order to move someone through that process. So hopefully, if you do have questions like that, you would find that a resource.
Yeah, that makes a great deal of sense too. Yeah, Lindsay, I think this is fantastic, and hopefully anyone who's interested in single family rentals has taken lots of notes and has kept up with the conversation here today. So thank you.
Matt, thank you so much for having me on. I appreciate it.